Hey everyone, it is Evan here from the Trade Risk on Tuesday, June 18th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to kick things off with our dashboard here. You can see it is a sea of green right across the board. All of the major indices closing firmly in the green today, up about 1% across the board as the two-day Fed meeting kicks off officially today. 5-day change numbers also in firmly positive territory, and we are now above all of the key simple moving averages in the major indices. I know the 50 is pretty close on the IWM. It looks like it's above it. We're kind of recording this a couple minutes before the close, so maybe that one turns down. But otherwise, it looks pretty good when we look right across the board there. And when we look at sector performance, we have biotech at the top of the list. It's been sort of underperforming and lagging a little bit over the past couple of weeks, but it's right at the top, followed by industrials and discretionary. And on the downside, we have semis, staples, and financials. If we look across major markets, we have gold, silver, metals right at the top, followed by oil. And then on the downside, we have volatility, natural gas, and emerging markets. So let's jump into the charts here with the S&P 500 weekly time frame. This is where we like to start our analysis. First things first, it is only Tuesday, of course, but so far we are trying to take out last week's highs. We're trying to continue this trend to the upside where we sort of failed at the highs last week, where we couldn't hold those gains. We're now back above them, and again, only Tuesday and a Fed meeting tomorrow for the official rate announcement. So be interesting to see if we can close and hold on to these gains this time around. If so, it looks like we're well on our way to sort of retest the prior all-time highs, close to 2950 or so. Bulls pretty firmly in control here. A fade down and kind of a finish like we did last week, though, would certainly start to give the bears, the sellers, a little bit of credit or a little more confidence, perhaps, if we kind of fail to hold these upper or mid to lower 2900s again and we close down. That would be a little bit of hesitation there, I think, for longs. Otherwise, as long as we hold above 2872, the midpoint of this range, then I think the upper level momentum, the high level kind of basing action will remain in there and be constructive overall for this market. If we can hold above there, 2800, that's the next big relevant level to the downside. Otherwise, this is sort of the landscape that we're trading in. Now, if we go to some of the other majors here, we'll go to the Russell 2000, and you can see the Russell. Actually, first, before we let's actually switch back to the S&P 500. Let's go to the daily chart for just a moment. This is the daily chart, and just to mention here, in case it's not clear on the weekly, is this was a sort of gap and go breakout day here over last week's range. Now, we said that on the weekly chart, but I think the daily just kind of shows the picture here as we consolidated tight, kind of overlapping sideways range from last week. You can see we kind of gapped up here on Tuesday, and then we sprung higher, didn't finish right at the highs, but still a good 1% day, all things considered. So nice little kind of high tight flag breaking out. This could be the continuation pattern, which then gets us to retest these highs. Again, MACD leading here on the daily chart. Now, with that said, let's go to the IWM here. Let's go to the weekly chart first. You can see, we'll switch over to this board here, that we are again trying to take out, or in the process of taking out and closing above last week's highs, and we're going to want to see again if that can hold in here. The Russell 2000 has been the underperformer recently, so we want to see if that story can change. This is where I've been really paying attention here, because the IWM has been underperforming, and we've been looking to see, well, if this market is in fact going to have or experience a bigger pullback, then we would expect the Russell to sort of lead the pullback to the downside, and so far that has not happened. We're seeing the IWM start to resolve higher, and there's some good kind of clearance back up to 160 or so. That would be the May highs, the year-to-date highs that we'd really want to see the Russell start to break through in the coming weeks and months if we are to continue in this uptrend. Finally, NASDAQ 100 here, making some good progress above or continuation from the initial reversal that took place 2 weeks ago. We're taking out last week's highs. We're up 2% so far on the week. So things look pretty good here. Good volume coming in today on the Qs as well as it starts to break above this May kind of the May highs and then the recent June highs. So all in all, lots of excitement or encouragement or bullishness into the Fed meeting. That could lead to some disappointment, perhaps. We'll have to see, or perhaps the market's getting it right, running up, and you know, there'll be more continuation into the end of the week. We'll have to see how the event plays out tomorrow and into Friday. Now, the peculiar thing is we still have equity markets rising along with TLT, so along with long bonds. We're continuing the move here to the upside as well. If we look at the weekly gains, we're up 0.68%. We're back again to challenging year-to-date highs, trying to close at new year-to-date highs, but kind of backed off a little bit today. But this is, again, trying to emerge now here alongside TLT, alongside GLD, which is also working itself higher as this continues to kind of break out or attempt to break to new year-to-date highs as well. And the dollar here not quite breaking to new highs on the year, but still kind of rallying a bit today, going back to the upper end of this resistance. So we do have that interesting scenario where equities, the US dollar, gold, bonds all seem to be just bumping up and wanting to continue higher. And at some point we would expect at least one or more of those to give and start to diverge a little bit. And again, perhaps after tomorrow's event, we'll start to get that action playing out. So for now, let's continue on the normal sort of path that we look at here. So gold, we talked about, it's breaking or rallying back up to these year-to-date highs. Looks pent up. Looks like it wants to go here. I like GLD. Don't have a good entry on it. But I do like this market here for the possibility to break out, and this is at multi-month, multi-year levels around this 130 area. If it can start to break above there, then that's a pretty big area for this for gold. If we go to silver, you can see again putting in some volume, trying to work itself finally above that $14 area. The daily MACD is leading higher here. I like the potential for silver to play some catch up and make a good move here over $14. We'll see if it can get done. This is something that looks interesting here for a trade setup back over $14. Last but not least, in terms of commodities, natural gas breaking down here, heavier volume, coming back and closing at new year-to-date lows. This continues to be a dog here. It had this attempt we talked about as maybe it can finally start to work itself back up for some dead cat bounce, but even that seems too much for it right now. This remains heavy, and on all time frames, this is got some bear trends and momentum against it. Last but not least is oil, which is really making the opposite move today. We have USO, which is climbing today, up 4%. Natural gas's loss is oil's gain here as this tries to work itself higher. Again, this has been beaten up, and this does have trend and momentum against it as well. Certainly not by the same magnitude and landscape as natural gas. This here is starting to work itself back up. Again, move back up into the $12 area, kind of a retest there. Perfectly reasonable. Seems like a good spot for it to head to if the bulls can continue this rally to the upside. So that is it. I think I covered everything I needed to or wanted to. Do pay attention to some of the event risk tomorrow. We'll see if the bulls can continue in this equity market, gold market, bond market, and dollar market right across the board into the end of the week. And we'll be back on Friday, of course, with our market recap video. So as a heads up, as an early heads up, we'll have a couple of weeks of no videos coming up, which is something that doesn't happen too often. Pretty reliable and consistent with the market recap videos, but we do have some I got some traveling coming up that is going to pull me away from the screens. But I will be here Friday, and that might be the last one for a couple of weeks. But I'll update you guys on the next video. As always, thanks so much for tuning in and watching. You can subscribe on our YouTube channel or follow us on the Trade Risk. Have a great rest of your day.